Hey guys, welcome to my YouTube video. This is Marco Trades. Today is December 25th, so Christmas. So of course there's no trading going on at this time, but I thought I'd just make a quick video because I am still new to YouTube, so I just want to, make as much content as I could, give as much value to you guys as I could. So today what I'll be doing is just going over price stack from the NAS 100 E-mini series. And so we're gonna go over Friday's price action, and I'm just gonna kind of like walk you guys through how I find my trade setups. As you know, I trade ICT concepts. I'm still relatively new, so I'm not perfect. But if you guys have any advice or just any thoughts you want to just throw into the comments, you can do that. I'll respond to you. And so yeah, so let's go ahead. One thing you guys should know is that one thing in trading is the concept of time then price. And simply put, and the best way I could put it is we're not just going in the market at any time of day. We're not making trades at 12 o'clock, or we're not making just trades like after 5, or just along those lines. You want to pick a certain time frame when you're going to enter your trade or look for a trade to enter. So my time frame is going to be between 10 and 11:30. That's when I want to look for my trades. That's when I want to find my trades. I feel like that's when a lot of opportunities present itself, especially with the high volatility in the market. So I have my chart here on the 15-minute. So what I would do in the morning when I open my chart is I'd kind of just go through the different time frames. Like you want to do like they call it a top down analysis, where it's like you go from the high time frames and then you scale down into the lower time frames, because as some of you will know, time is fractal. And for those of you who don't know, what time is fractal is just saying is that everything that's happening on the daily chart is going to happen on the 4-hour chart. It's going to happen on the hour chart. Is going to happen on the 30-minute and the 15-minute, so on, so on. So basically, each 1-minute candle, 5 1-minute candles make up a 5-minute candle, and 3 5-minute candles make up a 15-minute candle. I think you guys get the point. So why we go to the higher time frame is just kind of like to get our bias. We want to see, okay, what's the clear direction that price is likely to head in. So like that's how we would do that. So for example, we're on the hour chart. I see a fair value gap right here. I think ICT calls it a sell side imbalance, buy side inefficiency, or SIBI. Also known as a fair value gap. And I'm going to teach you guys what a fair value gap is and like what it means. Obviously, go to ICT if you want the more in-depth, the more detailed, the more correct version of what is a fair value gap, because it is his concepts and he would have most of the information, but I'll teach you to the best of my ability. So yeah, sell side imbalance, buy side inefficiency. So all it's saying is price wasn't efficiently delivered in this area. There's a lot of sell orders, but there wasn't any buy orders placed in this area. So when I see price, for example, in this area, I'm going to, especially seeing that we just broke this high, I'm going to think, is it a possibility that we can explore this fair value gap right here? Because this is a lot of sell side that was delivered. Look at that huge range. Like we could even look at this huge range, and as you can see, it's starting to be filled in. You see prices starting to be delivered in this area, and now we're going for this fair value gap. So what a fair value gap does is it just offers fair value. If you wanted to buy Nas E Mini, for example, at say when it was around this level, would you be able to get into a trade? Do you think that you would be able to get into a profitable trade like around here? No, because the moment you place your buy, price continues to go down. The moment you place your buy, price continues to go down. And it continues on and on. So basically, all we're saying with a fair value gap is it's a gap in price that price is likely to refer to, so that buyers or sellers, depending on the direction of the market, would be able to get in their orders. So I don't know. I see some people draw, like they draw on these things, but I don't know how to do it. But I'm gonna try for you guys. Like I said, I won't be on too long. Today's Christmas, and I want to spend it with my girlfriend. But I did make it a point to, try and teach the man them. Let's see if I can do it like this. Okay, let's see if I can do it like this. Okay. Maybe I might use a color that registers a bit more, like green. I mean, I suppose I could just show you on the chart, but I'm probably gonna just show you this way first. So me making these candles, just pretend like me doing these candles, just pretend like these are candles forming on the chart whilst you're trading. Oh, these are green candles, so let me do it this way. Okay. Oh, come on, man. Work with me. Okay. So, when you look at this, you see 3 green candles. 3 long bullish green candles. Pause. So, when we see this, this means the price shot up so high. It's heading in a direction. What is it heading for? It probably is heading for the buy side liquidity at the top, the resting orders at the top of the market. That's what it's probably reaching for, right? So when price shoots up like this, some folks, they like to get into the market because they see the green candles. It's a lot of excitement, a lot of emotion, so they rush into the market. The market wants that. It wants you to rush into the market. And when you rush into the market, you know what happens? I'm going to show you guys what happens. This is what's going to happen. Do it like this. When you rush into the market's going to turn on you like this. It knows that people are getting excited and want to place buy orders. And your bias might be right. It might be a buy type of day. But the thing is, like I said, it's time, then price. This probably isn't the right time. At 10 o'clock, we're probably making this retracement to go into this fair value gap. Let me make sure to explain the fair value gap to you guys as well. Yeah, so this gap in price, which is, well, first I have to say the fair value gap is formed with 3 candles. You know this. First candle, second candle, third candle. The gap in price is going to occur at the top of the first candle, or the wick of the first candle, and the bottom of the third candle, so the wick of the third candle, right? That's going to be your gap in price. Price never touched this area. So we're going to expect that price would want to return into this fair value gap to give you an opportunity to enter the market, right? Now, this could mean either two things when price returns into this fair value gap. Price could stay above the consequent encroachment. That's a new word you guys want to keep in mind. The consequent encroachment of a fair value gap, which is basically just a fancy way of saying the 50% of the fair value gap. Price can also go below the consequent encroachment of the fair value gap as well. And it can do either two things. It can go below the consequent encroachment, wick up, continue to the upside, or it can go below the consequent encroachment, close outside of the fair value gap. So what some people call disrespecting the fair value gap. And then that can be sort of a bias to say like, oh, we're done with buy side for now. We're probably going to go lower. You'd obviously need more confluences than that, than just rushing into the market, because it has happened to me a lot of times. I've rushed into the market when I see we inverse a fair value gap, and there's like an order block or something down here. Price taps the order block, reverses to the upside. But anyway, just show you this. Okay, so like I said, price can do this, refer to the fair value gap, stay above the consequent encroachment or 50% of the fair value gap, and then go to the upside. This is a great setup. So if you look at it like this, like I said, most people would want to get in on this candle, right? And their account probably won't be able to take much. So with this move right here, returning back into the fair value gap, this is what could be causing you to get stopped out, and then you notice price goes in your direction. So what we would want to wait is we would want to wait for price to go back to the consequent encroachment of the fair value gap, and we'd ideally want it to stay above the consequent encroachment. That's kind of like giving us a really good confluence that we are bullish. I've known ICT, he says you should buy when the candle's like going down, right? And he's the guy. If he says it, do it. For me, I really don't like doing it. I feel like it gives me a lot of anxiety. So what I like to do is I kind of like to see, like, for example, like this candle, I'd like to see a close above the consequent encroachment right here, or 50%. And then I would like to see this candle open up, form a little wick, and then push higher. Okay, let me show you another thing what can occur. So this is amazing setup. I think this is what they call institutional order flow entry drill. If you watch ICT videos, you'll also know, and that's just us staying above this consequent encroachment and continuing on to the upside. But let me show you what also can happen. And so when using fair value gaps, you can be aware, because this can also cause you to get stopped out. And this is like pointing back to why I said, I really don't like to enter when the candle is going down. So this is, what people would call disrespecting a fair value gap or inversing a fair value gap. As you can see, we created this gap. This would kind of make you think that we're really bullish, right? Until you see we close below the gap now. Keep in mind, this is just supposed to deliver efficient price inside the gap and continue on with the trend. So when it delivers sell side, closes below the gap, especially with like if there's like liquidity below us, this would kind of give us like the bias to say, oh, okay, we're kind of, or maybe, because it also goes with narrative. You can't just make these decisions without a particular narrative or bias as to where the market's going to go. So market can do this. It can close below this gap, and then it'll do something like this. Just put this. It'll close below the gap. It'll tap back in there and continue downwards. A lot of people like to trade using inverse fair value gaps. I believe it's good to form your bias. I don't believe it's good to just blindly go in and make a trade. But here's something I would like to see. For example, I would like to see, and I know like some candles are red and some are green, but I'm just gonna keep all these as red just so I don't confuse anyone. And by anyone I mean myself. Okay. So I'm just letting you guys know, just this is my just tip. This is what I would like to see. So instead of entering off of this inverse, because like I said, sometimes price can close below here or wick below here, continue to the upside. I would like to see a strong closure below the fair value gap. I would want us to create another fair value gap, and then tap back in, and then continue. Okay. Tap back in and then continue downward like that. Let me just change it red so it makes sense. So you see that? This is a W setup, and then aim for whatever liquidity is below. Let me get all this nonsense. So now that I've kind of like showed you guys it like with the drawings, I'm gonna show you it using the chart. And I also like to say that I'm not the best at it. I'm just getting started. If there's anything you guys need to know, want to learn, just let me know, and I'll be able to look at it. And if I don't know, I'll figure it out. Okay, so we're gonna backtest Friday. So let's say we're going into the market. One of the things we want to do, let's go to our 15-minute chart. This is kind of like where I like to start. I feel like I can also use the daily chart and the hourly chart to get a better idea. But since we are just trading intraday and on the 1-minute chart, and we're not swing trading or looking for longer positions, I think the hour to the 15-minute is fine. So let's say hypothetically that my trading time is 10. So let's just say I'm going to mark out like 9:40 or something. And I'm going to mark out the lines. I'm going to mark out 9:30. That's the open. I'm going to mark it out. I usually don't do this when I'm actually trading, but I'm just doing this so you guys can focus on the time frame that I'm trying to focus on. And see what I mean by time and price. You see all this price action, right? Well, this is the 15-minute, but I'm just saying, like, you see all this price action, but we're focusing on this little area. You see how markets like so choppy and back and forth, right? But in that sweet spot, you'll see how it extends. Then after, choppy again. But anyway, so we go to the 15-minute, and we're going to mark out our buy side and sell side liquidity. So we're going to start off with sell side. And for those that don't know, all liquidity is just resting orders in the marketplace. These are where people are placing their stop losses for their positions. For example, if you're in a buy and the market's going up and your stop is here, the market's gonna return to that at some point to take you out of the market, to take you out of your position. Because let's be real, this market is designed to take money, not to make people rich and drive Lambos. It's designed to take money. Okay. Let's see. Is this one? Okay. This would be our buy side. Okay. Is there any more? I mean, I guess one pretty major level would be here, but we're not trying to win the Robbins Cup. So yeah, so we have our sell side and our buy side marked out. Another thing you want to look for in the market would be equal highs. The market has a high probability of wanting to take out equal highs and equal lows. So when you see those in the market, those are like really good to add to your confluences to say like, hey, market's probably gonna aim for this level of liquidity. So now that we have buy side, and so actually we can add. I'm gonna put this as major buy side. Then this is a high right there, so these are equal highs as well. So I'm gonna just put this as initial buy side. Okay, so we have our sell side, we have our initial buy side. Because what can happen as well is price can go into this initial buy side, then turn around, and then we have our major buy side. If you're trading with partials, obviously you know you would take one partial off here and then there. But let's go down into the lower time frame so you guys can see how I form my trades. Okay, so let's see. Okay, so remember what I said about taking out like relatively equal highs and lows, like taking it out. So as you can see, guys, this is about 9:30 right here. Market opens up. We have right here relatively equal lows. About 9:50, we dipped below, took out the relatively equal lows. I just taught you guys about fair value gaps. So I'm going to give you 1 second, and I want to see, what do you notice about this area right here? And yeah, you should actually go through it, look at it, because this is important to note. So if you look at this area right here, keep in mind, this is going to be the time frame we're trading. But if you look at this area right here, you always have to reference what happened before to kind of like get a clue of what's going to happen next. This is a fair value gap, guys. Make sure. Oh wait, my magnet's off. Ooh, need that. Then it's the bottom. I think the bottom's right. It's a fair value gap. Stretch that across. What do we notice? What does price do? Price dips down, rejects from the fair value gap. It doesn't even go into the fair value gap. What does that tell us? If price comes down to a fair value gap, it doesn't even want to go in. It wicks off of the fair value gap. Nobody closes inside the fair value gap. That's saying we're bullish, or vice versa, bearish. We're so bullish and we're so bearish, and the price is so strong that we don't even want to go into that fair. We don't want to go any lower. All right. And also, I'll have to point out, this is a order block. If you don't know what an order block is, comment on the video. I can make a video about order blocks as well. Okay, so 950, we see price. At this point, I would have waited to see if price was going to come into this fair value gap, and I would have been ready to either, I'm not saying take a trade, but kind of like position my mindset to say like, okay, is it going to be a buy? Are we going to reject? Is it going to be a sell? Are we going to inverse it, disrespect that fair value gap, and aim lower? With how price action has been, especially like since Trump taking office, I feel like we've been really bullish since then. So I probably would have been looking for buys, especially with the initial buy side that I marked out and the major buy side that I marked out. So when I see that, we're going to go down to the 1 minute. I take all my trades on the 1 minute. The lower time frame, but you do need the smaller time frames, the bigger time frames, to kind of like get a clue on what you're gonna do. Okay, so I'm gonna show you guys this. 24 minutes. Okay, I'm gonna show you guys this, and then I'm probably gonna leave and enjoy my Christmas. It's 9:32 here in Canada. So see, around 8:30, Fair value gap was formed, and 830 is like pre-market, guys. Fair value gap was formed, tapped in. We have this bit of consolidation or accumulation. Right, and then price goes back down there. Oh, this is where is it? This is 9:30 open, guys. As you can see, we didn't get much movement in 9:30 open. Then we got this big manipulation to the upside. Came back down, took out these relatively equal lows. My trade setup is at 10 o'clock. So boom, here we are at 10. Just gonna drag this over closer, so keep your gaze in one area. All right, so here we see price is looking like it's forming bearish structure. This is going to be right here a change in the state of delivery, meaning we were bearish with this price action, but now you can see the bulls are taking over. I mean, market is an algorithm, but I still just refer to it this way because it's more easier for the mind, I mean, to comprehend. But anyway, this is a change in state of delivery. Market went from bearish to bullish. We're going up now. All right. This also is an order block. So you might say, oh, but Marco, you just said this is a fair value gap. You said if we're bullish, price is going to go into the fair value gap and go up. Yeah, but this is an order block here, right? Price also goes into order blocks. So this is nothing to be scared of. When you make your order, you should position your stop loss in a spot that it won't get tapped out. Being real with you, if I had, for example, placed a trade here, my stop loss probably would have been here. It probably would have got tapped out. But let's look at the price action. Comes down into the order block, displacement to the upside. Believe it or not, this is a fair value gap right here. Inversed it. This is not one that I would use or pay much mind to, but inversed it. Okay, cool. Now here, this is a small fair value gap. This actually is a fair value gap. So as you can see, price ran through this particular area a few times. It's not particularly bad. Sometimes you have to watch out because it might be accumulation or consolidation, but it's not particularly bad. So right here, what you see is us inversing this fair value gap. This is creating a balanced price range because we have buy side and sell side efficiency. That's buy side and sell side, it has been efficiently delivered in that price range. So all this means is if it continues to go up, it's probably not going to come back down into this area. Did it? Nope. All right. So let's focus more on the entry. Looking on the 1 minute, there doesn't seem to be an entry. Like you could enter in off of this order block. You could enter in off of this inverse fair value gap because these are like the different PD arrays that ICT has. But I don't like these. Let's go to the 5 minute. Sometimes you're going to find that your entry is going to come off of the 5 minute or higher time frames. Trading view is, oh my gosh. Anyway, so I didn't find anything on the 5 minute. Didn't find anything on the 5 minute. So what we're gonna have to do is, just for the sake of this video, I'm gonna show you guys. We inverse this gap. We had a change in state delivery. respected this order block. Those are three confluences that we have. Anybody see it yet? No? Fair value gap right here. Drag that cross. Boom. We stayed, body's closure stayed above the consequent encroachment of this fair value gap. Marco, but the wick came down there. Wicks can do damage. They can come down. That doesn't mean anything. Once the bodies are respecting the fair value gap, that's all that you want to see. So this would be our entry. I'm going to use this just to show you. Now, I'm just letting you guys know, I don't like a big stop loss. I actually like a 40. I like a 40 tick stop loss. That's been working for me so far. So I want to stay with that. Some people, they don't pay much attention to like the amount of ticks. It's just for them, it's kind of just about, how do I put it? Just the price action. But a lot of those people have more capital than me, so they can afford to, like, for example, put their stop loss at this low. Do you know how much money it would be for me to put my stop loss at this low? More than I have, I tell you that. Okay, let's see. So that's our entry. Right now, we seen this is saying that it's about 332 ticks. I'm not gonna be in a trade that's for 332 ticks. But what we aim for would be our inefficiencies, and we would also aim for highs. No, highs, and, like, for example, lows if we were taking a sell. So all these highs right here, this is buy side liquidity. All of this is buy side. So you could actually aim for all of these targets and they would have been hit. I'm not going to aim for those targets. That's just not me. So what I would aim for is this simple trade here. Aiming for a level of liquidity, which would be right at this high. And how I would go about it is I would watch price as price starts to form. And one thing I would be mindful of is this fair value gap right here. This is something that would make me think, if we can get through the consequent encroachment of this fair value gap and have a closure above there, I would know, okay, this is a good trade. This is heavily bullish. Now, if we rejected off the consequent encroachment and we started to look like we're forming structure back down to the downside, I would be worried. You have to trust in your trades, but I would be worried. What I would probably do after we even got into this fair value gap was probably move my stop to break even. It's not good to choke your trades, but at certain points, I mean, I feel like you have to know when's a good place to position the trade or position your stop. So if we're making it to this fair value gap, I just want to see a strong run through, because as you can see, the price here, price came strong through here and then closed below. I want to see a strong run through price through there, not a rejection of any sort. And as you know, my target was this high. Let me go into 1 minute so you can see it better. Oh my gosh. See that? You guys see this? Look at this. And I know what you're thinking. You're thinking, oh, but like, what about this whole move here? What about the whole move there? But don't think like that. The market is designed to have people in this casino gambly type of vibe, right? But the moment you think like that, you're gonna lose. You're gonna lose every time. Your objective is to find an opportunity within the market and within price action. And these opportunities don't occur every day. But your objective is to find an opportunity where you can make profit, get in, get out the market, and reserve your capital. So here is a 44-point stop loss and 180 tick profit goal. It's more than enough. It's really more than enough. What I'm going to do is I'm going to just show you the calculations of risk to reward, how much you'd be risking, and what will be the reward. So 44 times 4, because as you know, the NAS E-mini it's $5 a tick. Every tick is worth $5. Every little tick in price is worth $5. So you'd be risking $220 for a reward of $900. $220, $900. Do you really want to risk more capital? Because, mind you, if you stayed in, yes, this could have been a lot of money. However, what if price reverses? These are things that you don't know. And being honest, when you get into the gambler mindset, it kind of just affects you and it affects your trading. And God help you if you lose, because then you'll be in this point where it's like, oh, like what do I do? I got to make the money back. This money was for this bill, or just stuff like that. And the moment you get into the mindset where you're trying to get the money back, you're going to lose every dollar. I hope you don't, but you're going to lose every dollar. One thing I have to say, this is not financial advice. I just want everyone to know I don't know anything financial. All I know is what I have learned from these videos and watching them on YouTube. But if you need financial advice, go to a licensed professional. I'm just showing you my ideas. Now, whether you can use these ideas, and by my ideas, I mean ICT's concept, but whether you can use these ideas and be profitable, that's for you to discover on your own with your, whoever advises you financially. But yeah, so this is a good opportunity to get in on a $900 profit. So one thing I would like to say is kind of just like the fair value gap is a tool that's so important, and it actually kind of changed my trading, because before the fair value gap, I was just placing orders anywhere. Before I knew but time and price, I was just placing orders anywhere. Before I knew but all these confluences, I was just getting tapped out left, right, and center. Mind you, at this point, I still won't say that I'm like profitable. I'm not full time. I do have a full time job, trade on the side, for now. But what I would say is that since I've started using it, I have seen a difference in my trading of being able to make $1,500 like in a trade, and also in a day too. These are on eval accounts now, not like real capital. I've actually considered using real capital, but then I tell myself like, if I haven't passed an eval account yet, do I really want to put real capital online? I have a friend who trades, and his whole thing is, he said he wasn't really profitable until he started using real money. So that kind of made me think, but then like, do I want to like risk my savings at this point? Am I comfortable with myself? Yeah, on my winning days. On my losing days, I tend to crash out. So I'm probably not gonna do that. Yeah, but this is how I use fair value gaps to get in trades. If you guys want more info on the fair value gap, you can feel free to comment. I'll be able to answer any questions you have. If you guys also want me to make videos on maybe other PD arrays from ICT, like fair value gaps, order blocks, breaker blocks, mitigation blocks, stuff like that, how to use higher time frame analysis, just stuff like that. Basically, if you want like more videos on what I use to enter my trades, like I can do that as well. But I'm gonna end the video here, guys. I think I've talked to you to death long enough. I'm gonna go chill with my girlfriend and enjoy Christmas. Like I said, this channel is all about growth, growing and trading, going from unprofitable to profitable. Thank you for watching, and hopefully one day you guys will get to see a profitable Marco Trades. And yeah, and thank you for joining. I hope you like and subscribe. Merry Christmas. And if you don't celebrate Christmas, Merry Christmas anyway, but Merry whatever you celebrate. And I wish everybody have a great day. Bye.